One of my favorite things about doing conversations with the Carnegie Council is we don't have to put ethics to the side and we can ask about these issues from strategic, financial, and also ethical perspectives. So, a two-part question. You'd mentioned the problem being with autocracies. The first is from a returns perspective, what is the problem with autocracies? And then, second, from an ethical perspective, what is the problem with investing in autocracies? And what do you say to folks who say, well, economic growth brings liberalization to these autocracies?
Yeah. So first, the question there was the kind of the investment case for not investing in autocracy. So, I mean, I think the biggest investment case is that freer markets have much better foundations for growth. So they are, they have the foundation set to support growth because they have transparency, they have more flexibility in their market, they have feedback loops on the market level instead of central planning. So they have incentives for growth and innovation versus incentives to put state interests first. So that's a much better setup for growth. And so I think that the biggest thing is freer markets perform better, and that's the premise of our company and how we invest. But as far as investing in autocracies, there are some risks that I think investors are starting to take notice of. So there's three main risks. There's political risk, regulatory risk, and autocracy risk. That's the way I categorize it. And those are three different things that are all related, that are heightened in autocratic markets. So first one being political risk. Companies in autocratic regimes have to prioritize state interests above the interests of all other stakeholders, including their customers and equity shareholders. So investing in these companies lowers the cost of capital for them to operate this way. So we're essentially, as investors, subsidizing their cost of putting state interests first. Now, in some autocratic markets, we're talking about China here, the line between military and civil activity also is diminished. And so often through these funds, passive investors are inadvertently funding military activities that may be against their own interests and the interest of free people everywhere. So these types of investments carry also sanction risk. Right now, we're seeing the U.S. possibly about to sanction some of these investments here in the States of these Chinese companies, the military-related companies. So second risk that is heightened in these types of markets is regulatory risk. We've seen already some very volatile and very unpredictable government actions that can wipe out shareholder value overnight. So example of this, last year, we saw the education companies in China, online education companies like EDU, TAL. These companies were very profitable companies that were growing fast. I mean, the joke in China is, hey, if we can't get a job after graduation, we'll just work for New Oriental because they pay so well. These companies were doing very well. And overnight, Friday night, government decides, okay, you guys are now nonprofits. You're not allowed to make a profit anymore because we are wanting to decrease the cost of raising children because now we want people to have more children because of decades of the one-child policy has decimated our demographics. That overnight, these very profitable companies, their value was completely wiped out. And we've seen the Wall Street Journal report that, the founder of New Oriental basically broke down in his shareholder meeting the following week. And so that's a very sad situation, but also a very real risk in these types of markets. We saw recently in the Russia market that shareholder value is completely wiped out across the board. That's a little different situation where it's, they literally became untradeable due to the worldwide sanctions. But again, same result. So shareholder value destruction due to policy interference or due to sanctions is a very real risk in these types of very autocratic markets. And the last one is data risk. So companies that are in these regimes use accounting practices that don't meet international accounting standards. They don't have transparency. And we usually don't know about problems until they're too late. So one example is Evergrande. Their debts were showing up on the wrong side of the balance sheet, the way that they do their accounting. So nobody knew there was a problem until it became way too big to fix. There's also not independent verification on data because there's no freedom of speech, freedom of media, or any kind of freedom of expression. So nobody can question data that comes out of companies or out of governments. So without that foundation of freedom in place, we really can't use data from these countries as if they are something that, you know, is useful for measuring the impact of investments. So especially ESG investors should be aware of this, that ESG data from these countries is not reliable either as a way to measure impact.
Interesting.
So those are the three risks. Now, that's the, you know, investment kind of risks and the investment case for freer versus unfree markets. As far as the, you know, moral perspective, we do see investors that invest this way for, you know, just to align their values with their investments, and I think that's a very good thing. Like, as investors, we are in a position to direct assets, and that is a position of power and privilege. And, you know, we can affect outcomes. So if you're concerned, first of all, you know, we hear a lot about concerns about China, right? So if you're concerned that China is going to invade Taiwan, but you have the power to affect those outcomes, you know, we should use those powers for good. But also, if you're concerned that China is going to invade Taiwan for investment purposes, I would be a lot more concerned in emerging markets funds that have, you know, 30 to 40% China at any given point than one that has Taiwan. So one is being aware of the risk lying with the autocracy, and two is using your powers to affect outcomes for good.